Hello and welcome everybody. Let's get going. So got a lot to get through. I don't want to sort of cut into your Sunday evening too much. So let's get going. As you can see on this CNBC headline, we have got a really busy week. This is such a critical week. We've got Apple and Amazon giving earnings on Thursday. We've got the Fed on Wednesday, and we've got GDP on Thursday as well. We're expecting minus 35% in the US economy. An incredible number. So the market has been holding up really well in light of that figure, which is expected to come down the line. And yet here we are. Here's the main reason why it's sitting up. It's because of the incredible levels of stimulus coming from central banks. So yeah, let's just go through this piece by piece and see if we can piece this together, put this together. Okay, so let's look at the dollar. This is actually the euro. So let's look at the dollar in light of the euro. And what we've got here is an incredible push higher. So with the US losing a little bit of control over the virus and Europe doing a heck of a lot better on the virus front, and with US GDP expected to be a horrendous number, then the dollar has just been dumped. What does that mean? That means that the commodity markets have actually been pretty good. Here's the gold. It's broken out of a range even. So the question is, when are we going to get to $2,000? Not if. And how much further can it go? Well, 1855 is potentially a pullback here. That's a big ask. Once markets get extended like that, it's can be tough to pick a pullback entry if you're not in this. So I was talking about gold at around about this area here, around about in June. Well, I was talking about gold for all of these months, so it did nothing, or it didn't do a lot around here. And then we really started to break some serious resistance levels towards the end of June. Another consolidation, another power up. So if we're going to get another consolidation, which is, I think the first few days of this week, I think Monday, Tuesday, in theory, could be quite choppy and narrow ranged, while the market waits for the Fed and ultimately that busy Thursday. So if we consolidate as we did here after this breakout, then we still could see some 1850s and so on. That's the best I can offer in terms of a pullback. Okay, so let's just look at silver as well. Silver is on a tear. So this weak dollar has dragged everything up. So silver looks like we'd need to see at least $21 on the silver. And if you look at something like copper, copper's been on a tear for quite a while anyway. Copper topped out in the most recent high on the 13th, last Monday. Sorry, that's 2 Mondays ago, isn't it? Where are we? 26th. Yeah, two Mondays ago. And there's been this is what gold could be doing in the coming week. So copper broke out, had a huge breakout from this area here at 60.75 up to 66.30. And has been sideways and creating a bull flag ever since. So this is what's possible in gold. I'm not saying it is going to happen in gold. Nobody knows what's going to happen in gold. Nobody. So it would stand to reason that we may get some sort of bull flag up here that could drag that down to 1850, 1855. Okay, that's just my best estimate. That's all I can do at this stage. Oil, in the meantime, because we're looking at oil, is much more sensitive to so confidence in the economy, and oil's been going nowhere. I've been in a few trades in the last couple of weeks on oil and trying to get this to break out, and it just won't do it. And last week I didn't expect it to break out in the end. Last week I just took small moves out of it and just left it. So I'm expecting oil to be pretty flat until we get at least Wednesday out of the way. If not, Thursday is obviously the day of the week. Who knows what to expect on Thursday with Apple, Amazon, and GDP. It could be a damp squib. It could be just a non-event. If everything cancels itself out, if maybe we get a surprise number in US GDP, but Apple and Amazon put in some weaker results, then maybe things will just be pretty flat. So I'm not suggesting for 1 minute that this market's going to blow up or blow down. All I'm saying is we just need to take it one day at a time and see where we are, because nobody knows where this market is going to be by the end of this coming week. So that's what I'm suggesting on the gold and the silver. The oil, I think we need to just back off, take it one day at a time. We'll stay on the subject of commodities for now. Wheat, I was suggesting, is going to get to $6. So if the continued dumping of the dollar carries on, then 535 is a potential pullback in the wheat for that then to potentially get up to $6. Okay, if we start closing below that 535, excuse me, just clear my throat. If we start closing underneath this area here, then back off. But in the meantime, that is, I'm still buying pullbacks in these grains, looking for them to bust up. The beans have been in a long consolidation period. They're sitting there doing nothing at the moment. So here's the setup for the buy down here at $8 and $8.30. There's the breakup. We get a, in Elliott terms, Elliott wave terms, we get a 1, 2, 3, 4, 5, 1, 2, 3. So that's a 5 and 3 wave completed. Then we get a 1, 2. So we're still potentially in wave 3. As long as beans don't close underneath this level here, then we'll see 920. I've said for a long time, I was even talking about last year of this going into 10. There's the trend line resistance. There's the support. Just a question of whether we can hold this area here and ultimately punch up. Okay, so this level here is 892. So at the moment, $8.88, $8.90 is the main pullback area. So that needs to hold, and that needs to, sorry, and that needs to break out if that is going to work. And last but not least, on the, obviously lots of commodities are doing interesting things. I've just picked the best ones. This is a chart I really like. This is gas. I think gas is getting ready to bust up. It's already breaking out. We've already had a, sorry, I just lost my pen for a moment. We've already had a 1, 2, so we're still in wave 3. Wave 3 is normally most potent. If that pans out, we should see 22. If I'm right about this 1, 2, 3 wave pattern, I think 18 is a pullback area. You're going to need a stop under these couple, at least 2 bars back. So that would take you to, why has that just gone off? That will take you to, if I just get my, you're going to need a stop under 1710 with a potential pullback for potential entry at 1790. A stop to 2 daily bars back at 1710 with the potential to get to 2150, sorry, up to 22 on the gas. Ultimately, gas could, if we at some stage, any stage soon, close above 21.25, then I think we're going to see 29.30. Now, why would you buy gas midsummer? Because this is the time when the contracts, where the institutions are, well, the industry is potentially buying up contracts for a potential increase in manufacturing and winter. Okay, industry is obviously a big consumer of gas, and the consumer is a big consumer of gas, depending on what kind of winter we get. So this is the potential build-up. This is the break. This is the huge overhang we've got. But that's the reward if we can crash through that overhang. Okay, so that's a wave pattern, a chart pattern, and support and resistance, the basics of trading, suggesting that that could go up to 21 and ultimately longer term, 6 months down the line, 9 months down the line, who knows? Nobody knows. Potentially back up to the November 19 highs. Okay, I had fun trading this up last year. And then we crashed out in November. Started dropping late November, early December, and now we're just building up again. So this time last year, we were here. This was June, July, August, September last year. October saw the pullback, and then November saw the high. So if we see that, this could apply to any commodity or any chart, full stop. If we're seeing that pattern over here, which I think we are, then we could be in for, you know, these kinds of punches higher. All right, so that's a trade idea on that one. If you are going to trade anything like these, anything like the gas, the beans, the wheat, etc., the key to your success is going to be trade management. It's going to be your risk management in this. So what do I mean by that? I mean, don't chase the market, wait for a pullback. do not trade over the position size relative to your account size. And if you get a winning trade, then you might want to consider adding to it on a low risk level. Okay, so I've spent a few minutes talking about the chart pattern and the wave pattern, and now I've switched to risk management, because only if you combine all of those factors together can you hope to protect your account and make a profit. Any questions, chuck them in the box. I have got my headphones on if you want to turn your mic on and contribute. That's up to you. Otherwise, if you don't interrupt me, I will carry on. If you don't ask any questions, I should say, I will carry on. Okay, so that's my view on commodity. So pullback on gold, 1850, 1860, pullback on silver, gas, and wheat. Beans, I think there's greater potential in the wheat rather than the beans. So that's dollar and commodities. Let's now look at market internals. I'm going to start off with what I mean by market internals. Market internals are indicators that could be giving us the heads up to whether the markets are risk on or risk off. Now, we saw a couple of heavy days, well, I say heavy, we saw a couple of days of selling in the Dow index, and the fear index, the volatility index, VIX, is still not shaken. We are still under this 30 level. So despite that selling in the markets, the weak dollar is at the moment supporting these markets, underpinning these markets. If we subsequently get this volatility index pushing above 30, and anything above 40 is very negative, very bearish. Anything above the 30 is a concern for the stability of the markets, or certainly the bulls' attitude towards markets, and anything above 40, then we are really in bear territory. The bears are in control if this volatility index creeps up. But since the spike from late February into mid-March calmed down and cooled right down, with the exception of 1 or 2 spikes, it's actually been pretty soft. Okay, so the other proxy I'm going to look at is transport. Anybody who knows anything about the Dow theory, Dow theory relies on the transport index. So Dow theory says if the transport index is a major indicator of risk on, risk off. So what we've got in the transports at the moment is we've seen this nice wave into resistance. So the pullback in mid-June, subsequent push up into late July, and then we've seen some weakness. So we've only seen, so we're not seeing fear at the moment, we are just seeing some profit taking and some weakness in the markets. We're not seeing fear at the moment. So let's just go to the indices now. Let's start with the Dow. I spend most of my time talking about the Dow, and you can see this resistance from early March that saw wave 3, 4, and 5. So in June we started to poke above it and immediately closed lower. So that was very bearish on that particular period. Came back into support and then ground their way up. And now we've had a couple of days of selling here, another couple of days selling back end of last week. So the main support here is 25.5. At the moment, this is still shortable with the potential to go down to 25.5 if this plays out. Okay, so let's just look at the other indices as well before we draw anything on that. Now let's look at the Nasdaq. What the Nasdaq does, the rest of the market tends to follow. So we've had this huge, this was much more successful and potent than the Dow. There is the pre-COVID highs, and post-COVID we are still sitting above the pre-COVID support. So yes, the Nasdaq's seen slightly more selling than the Dow, but all it's done is come back to this trend line. So if we close under here early part of the week, this could then indicate that we're going to come back to that support. If we dip a bit further and immediately close higher, then we could see the highs retested. So we're right on the line in terms of last week's selling. At the moment, it's just taken us down to support. It's not taken us into bearish territory on the Nasdaq. And like I said, what the Nasdaq does, the rest of the market tends to follow. So let's just see what we get on Monday. In the meantime, levels I would consider shorting in preparation for potential lower moves is a return to something like 688, 700 in the Dow to see if we can creep lower, can come back to that 24.5. S&Ps. S&Ps are very much like the Nasdaq. They dropped, but dropped right into support. If we pull back to 32.40, say, and continue to close under Friday's support 32.12, then you can see this overriding trend line has got 31.50, 31.60 there. Close underneath that, and then we're coming back to early July support. So short term, with the way in which the market's behaving, shorts are very much on the cards. But in terms of a continuation of this, we need to close under these support levels in that Nasdaq trend line and this S&P horizontal support, and the Dow continue to close lower in this Dow. So we've got major support 26,000. Any close on 26,000 is going to spell potential doom, short-term doom for that index. Okay. Any currency traders in the room? Let's have a quick. I haven't done a really. I admit I haven't done a proper currency check. No. Okay. Nobody's coming forward. So let's just have a quick roundup of. Yeah. See, this is the. Let's look at a couple of yen pairs, then I'll move on. The reason why I look at yen pairs is because the old yen carry trade still sort of sticks in my mind as a bit of a yardstick for the markets. You know, if the yen is still weak and we don't see a repatriation of yen, then that suggests there still is an appetite for risk for my money. Because of the issues that Japan's gone through with deflation, etc. So that pound yen is still sitting up. And to me, 1, 2, 3, 4, 5. Yeah, if we come back to 132, 135 and hold, I think that's going back to 138 plus. Let's look at the US dollar yen before I move on. Okay, there's the weakness in the dollar. So any continuation of that suggests normally the more bullish the US dollar yen, the more bullish the markets. I would normally, you would normally expect to see US dollar yen pick up if the US indices are going to pick up. So this is suggesting repatriation of the yen against the. Sorry, this is seeing repatriation of dollars of yen. Okay, right. Let's just go back to stocks. So we've got any UK stock traders in the room. You can see the effect of gold on Fresnillo. I mean, what a breakout is that? So do a screenshot of that chart, because that is an incredible breakout pattern. Notice how when this breaks out, I think the key for this chart for me is when this broke out here, it came back to kiss the trend line before you get the main move. If you put RSI on that, RSI will be screaming high for all the time this has been up here. That's why indicators are. What percentage breakout is that? Ooh. It's about, this move here is 450 to 780. It's about that move. I think it's about, hang on a second, let me just work that out. If that's the initial range, I'm going to do it very crudely. Duplicate, copy, yeah. So we've done, it's about 120% breakout, roughly, eyeballing it, 120, 150% breakout. Yeah. So, I mean, to break out more than the distance of the initial range is incredible. So that is repeated across a lot of those miners. So look, the BP is coming back on itself. I'm long this one. I've been buying dips in BP. We broke above or crashed into that trend line and we're back into this apex. So as long as we don't close under 290, I think BP could go back up to those highs. The jury's out. The fact we've come back in this and we're not able to close above 310 is a concern, but if we start closing above 310, I would start adding to that trade on pullbacks. Let's look at BT. Same story with BT, very similar chart patterns. Not managed to test that trend line resistance. We're inside the apex. If that closes underneath 110, we could potentially come all the way down back to 100p on that. Potentially. Close above 118, 120, and we'll see 128 quite quickly, and then could potentially make our way up to 150. Okay, so I'm along that one. Rolls-Royce. This one is on the upside of the triangle. come back to KISS support, come back to test support. Any close under 250, and that's in trouble. Okay, so I'm long this one with just a very small profit, very small. I will add if we close above 270 on Rolls-Royce.
Hi.
Hello.
Yeah, so this is going to be an really important week for Rolls-Royce then.
Yeah, we had a lot of airlines in the US reporting last week. We had issues like BA retiring their 747 fleet. So there's all sorts of issues flying around there, literally flying around.
Yeah. Even EasyJets went down this week as well.
That's a good point. Let's have a look at EasyJet. That's quite a decline, isn't it?
Yeah. That
is the main support on EasyJet is that 550. We had a gap up on the Monday the 20th. Sorry, that's Tuesday, isn't it? What happened to Monday? Why is that not showing me Monday? Was that a bank holiday? Must have been bank holiday.
Yeah. Okay.
So we are. Are you in EasyJet? I think you are, aren't you?
No, I think I got out. I know, actually, I put a buy signal.
Right. So that's the sort of line in the sand for EasyJet, I think. I know my daughter's flying back to Berlin on EasyJet. I noticed that they've suddenly really bumped the ticket price up. She's bought a £75 seat, but I think the same seat is now about 150 quid.
Yeah, because so everyone's getting away. So premium prices at this time of the year.
Yeah, well, she bought a ticket only a few weeks ago.
Yeah.
But anyway, yeah, we look as if we're going to come and sit at 550, and then that's got to decide what it wants to do. I suppose the Spanish issue is one of the things that's hitting this, isn't it? The Spanish quarantine.
International airlines?
Yeah, let's have a look. Yeah. IAG. Very similar pattern, very, very similar. That's right on the line now. So any close under 197, well, it's already closed under the 200 on Friday. If that can close any higher, the same story. Whichever way we close around that area there is going to be the short to medium term story in that one. Either we're going to come back down to 150, 160. If we dip but it closes immediately higher next day, that's quite bullish. But obviously there's all the signs are red as we speak. So at the moment one's got to expect that to be lower as the days tick by, but any pushback above 200.
Nothing's tempting me into airlines because I don't know what's going on.
No.
The news doesn't reflect with what's. If you've got a stagnant sort of share price.
I think we got
either way.
Yeah, I think airlines. Well, there's no good news at all for airlines at the moment. You've got a huge increase in COVID in the US for a start. We've got Spain being hit with quarantine issues. So yeah, I mean, just on pure news, you would expect these guys to come lower.
But as the fuel costs, will that remain the same, or will that go up as well?
Fuel costs in actual fact, I mean, the European guys are better off at the moment because European airlines are going to benefit from a weak dollar. So so in theory, we should see European airlines at least stabilize, but US airlines could. Well, let's run that theory.
Yeah, Lufthansa,
Let's have a look at.
Iberia or Lufthansa.
Well, I'm going to look at some US ones initially.
Yeah.
I see UAL are holding up. They're holding support. Southwest lower. JetBlue lower. Delta weaker. They're all on the line. We're all just sort of teetering on key pivot support. So, but as you say, nothing to tempt us in at all. All potentially going lower. Seeing what, because the other thing that's coming into this is, I think one of the main things that's, I think one of the things that's just about holding the markets up at the moment is the idea that the Republicans are going to approve, or certainly present and approve another rescue pack and a further stimulus package. So I think that one of the things that's holding the markets up at the moment is that next tranche of stimulus. If that, but that's tempered with the increase in COVID cases in the US. Anyway, it's all on the line. Short to medium term lower. But you know, where we are on Friday is going to be absolutely crucial. I think it's a week to have risk management at the forefront of your mind, and just manage whatever positions you're in and see what happens as each day unfolds.
Because Europeans put out a package last week, didn't they?
Yeah, they put on a 750 billion package. I tell you what, the key thing that wasn't talked about in that package though was, from the little I've read about it, admittedly I've not read a lot, it looks to me as if that's not going to hit the market until next year. The way well, let's face it, we're almost into August now anyway. I think the bulk of that money, if not all of it, isn't going to hit company wallets until next year. So that's one of the reasons why. Let's look at the. Actually, we didn't spend enough time. Let's have a quick look at the FTSE and the DAX. Yeah, so the DAX is sitting on support, looking lower. We've got this trend line coming. Once it touches that trend line, I think that's going to be the crucial point. That's either going to see a significant drop, or if we can hold that, it could project itself up, who knows, to 13.5. So I think, you know, we're just heading for really, really crucial times. But in the meantime, just, you know, be wary, stroke, sell. Let's look at. Let's go from here. Let's go back to a couple of stocks I was talking about last week as well. Let's look at Games Workshop. So this time last week I was suggesting you might want to short this. It didn't hit those highs, but I started nibbling around this level here once we got that lower close on Monday. So I'm short around about the 86 level. 86.10 was the Tuesday, Wednesday high, and we closed under 84.14. So my stop is now going to be above 86.40 to see if we can now close underneath this little support. So we are still firmly, obviously a lot of red on that chart, but it's still managing to hold up just. But I'm happy with that. I mean, if you look at, if I'm right, I think in the next 2-3 days we should tumble and at least come down to 73, 75. If we can really get going. But, you know, there's not all bearish signs in that market, as I talked about very early on with the VIX and the transport index. still doing okay. Yeah, at the moment, there's not any significant fear in the market, but hey, yeah, I'm shorting indices on any pullbacks in the early part of the week, and let's just see if we can get the continuation as the week unfolds. Let's have a look at. So as far as those airlines concerned, they've already been dipping for a few days now. Any other stocks that you guys are interested in? Let's just
If
see.
you go back to the ones from last week from G4S and HomeServe.
Yeah. G4S. Now that's done okay.
There's still warning signs, aren't there?
There's still warning signs, but that's quite an impressive end to last week, considering how weak the markets were. That's at the moment got relative strength. To sit up like that when the markets were so nervy and closing lower, that's done well. HomeServe. Definitely struggling, and when we're back inside of that pattern, we're back inside and lower on Friday. Wednesday, Thursday survived okay, but really suffered on Friday, like a lot of stocks. Well, at the moment you've got to stay short, but if at any stage in the next 1, 2, whatever days, we close above 1350, then back off. But I would still expect that at least to come down to 1290, if not lower, at least. Because if I take that chart pattern off, and we look at that in terms of resistance, and yeah, so I think the main support, tell you what, I'll take that off as well. Let's just put some support on there. That's cleaner. I think that's a cleaner way of looking at it. Definitely struggling, to say the least. And if you're not, I would consider 1337 is now a decent area of resistance, which we're closed under. So 1235 looks very likely at this stage, very likely. So if you're not in this and interested, 1338 is an entry, with 1370, 75 where your stop needs to be. So that's where your stop needs to be, above that level. This is your entry if you're not in it. I pull back to that 1337, and that's your target. So some pretty basic support and resistance analysis, to see if that can fall back into that lap of that. And if at any stage we close underneath that 1239, then we could see maybe not a repeat, but something like that sort of fall. I mean, it's looking, what happened over here at the moment is as if that's playing out over here. So let's see what happens. I'm not suggesting these markets are going to.
Just one more from me for UK.
Yeah, go
on. RB. I'm just looking for an exit strategy on that one.
Which one?
RB.
Reckitt.
Yeah.
Ooh, nice. That's only just put a sell signal in.
Okay.
New high, immediate close below.
Yeah.
That's only just put a sell signal in. So it's certainly weak in, for some reason. Is that earnings? Have they just had an earnings?
Must have been.
Because I'm just wondering if Thursday was earnings and Friday was
No, I didn't hear of anything. No earnings.
okay.
That was in March. Possibly early in the year.
That's been on a good run.
Yeah, I just thought
Wow.
maybe that's it. That's time for that one. But I don't. Did it ever reach the 8,000s?
I've got a high of 8,010.
Yeah.
Um,
Okay, I'll give it another week.
what are you looking to do with it?
I don't know yet. Maybe come out of it.
Are you still so you've been riding this up, have you?
Yeah, I'm riding up.
Right. Well, it had relative strength down here when the market was really getting hit. This did okay.
Hmm.
That's not a particularly sharp fall given what actually happened to the market. So that anybody who got in at that sort of a head and shoulders pattern back there in March.
Yeah, about March time.
That was quick to recover.
Yeah.
Very quick to recover. So.
And they just continued to supply and
yeah.
Was there at the time and because of the broad range of products that they had.
71.50 is a gap fill.
Yeah.
Yeah, that's well worth a look. That 71.50 looks as if that if things get ugly, that's potentially really good. Thanks for that.
Okay.
Anything else you got?
Not from me, no.
Okay, let's have a look at.
Oh, sorry, Barclays.
Okay.
I'm not in it, but I just wanted to see if
That's Ocado. That's struggling. Barclays still in the sort of
around about that mark.
Still holding up, but weaker, short term weaker.
Okay.
If we close under 110, then we could come and see 100 pretty quick.
The Metro?
Which one, Metro?
Yeah. And see, I thought this was going to be a sell. We talked about it ago. Wasn't there some news? Jessica said something about this one.
I can't remember. If you did, I can't remember.
Signal somewhere. But nothing's been happening.
Well, that's we're going to get a decision out of this soon.
Yeah.
Given again, that's holding up pretty well. It got really nasty during the main market sell. February to okay. Yeah, that's a tough one.
Yeah, I can't call that
it's
one.
worth keeping an eye on though.
Yeah.
Because that had a really nice, that's a very hefty breakout pattern.
Yeah.
I think, normally when you get a really hefty breakout pattern, it's not uncommon to come all the way back to the breakout. So if that comes back, and this would assume it's going to get beaten up. If it gets beaten up and then holds 80.81. That's well worth it. It's an interesting one.
Yeah.
Relative strength. Let's look at some basic UK stalwarts. The Sainsbury's, not a great chart, but it's hanging on. Okay, it's under major support. No, it's broken key support. It broke it and then attempted to hold on.
it really wants to as well, and I could feel it. Just it's almost there. It's
Yeah,
come out of the worst. They're back to normal. You've got the Argos stores that are still in there,
right.
and they've picked up on business. I don't know what they're.
Well, that's the main sort of support range. So it's got support right underneath it, around at the 185, 190 area. I would have thought that would hang on, but it's if we open and close above 190, then that could really get some buying behind it, I think.
But it's not massive margins, is it? I mean, along with Morrison's as well.
Yeah, let's
Then
look at Morrison's.
do the same pattern, and it did this throughout the whole lockdown, and then
Yeah, well, right, I have to type it in. I thought I had it on my list. Morrison's is MR something, isn't it?
MZ or
MRW.
MRW.
The supermarkets are doing okay. Morrison's is all right, but I mean, yeah, nothing to shout home about. But it's having a go. Tesco. That's one of the better ones. Of
Right.
all that Tesco's looks the stronger one to me. Yeah, and that looks, as long as we don't close back on the 210 here, I think we'll see 240 fairly soon at that rate. Okay. Let's look at some LNG. So financials are really under the cosh. Centrica's done okay. That's good. I tell you what, Centrica's a good buy at 41.70 now.
Okay.
It gapped up. If we close that gap and hold 41.70, that I like that. Sorry, just making some notes here. HSBC, so back to banks. Ooh, that's pretty pathetic. Standard Chartered. That's just a massive range. So it looks as if we're coming back to 375 if we continue lower than that one. So yeah, the Standard Chartered likes the strong dollar because of its exposure to Asia, etc., and the dollar. It tends to react better with a weaker pound. So if the pound starts to come off, this one might be better. Let's look at Auto Trader. We've looked at in the past. Yeah, so Auto Trader is a good short. Any gap fill at 540 on Auto Trader. Let's look at car. Yeah, and this is a good bellwether, isn't it? ITV. That's having a really hard time. 61.40. Wow. You're getting into that quite late. It's 63. Yeah, I mean that sell is well underway at the moment.
50s, 50s or
what?
Again, it's small margins.
Yeah. Well, you mean the charts are small margin, or they're as a company they're on small margin?
Well,
Or
no.
both?
I mean, to sell would be.
Oh, I see what you mean. Right. Okay.
Yeah,
So in terms of a trade, yeah,
yeah.
yeah, it's well underway. So
At least drop
unless you get
10.
any pushback into 71.30,
Hmm.
I would leave it. It's it's just underway.
Yeah.
Not looks at Lloyd's. Back to banking a second. Yeah. So there's a lot of people out there like Lloyd's. Let's just tidy this up. There's not a lot going on with it. So it's just under that. If that pops back above 30.30, that could find its way back to 38.40. But obviously, in the meantime, that's short. But I'm just saying, if I'm just trying to think further down the line, if the markets do end up holding up either end of this week or later in the summer, that could be one to buy, to tuck away for a while. To do what else can we talk about? Let's have a look. This is a good bellwether, 3i. If 3i can hold up, I would have thought the market, that could be telling us the market's not as bad as some think it is. Treading water, but holding up, but not selling. Let me just go back through the FTSE list. Just trying to look at some important ones in the FTSE. Diageo, weak, but not drastic. Centrica, we talked about Carnival. Well, that's. I certainly wouldn't buy it, but it's holding up, looking okay. What else have we got? Let's look at housing. Barrett's weak. See, there's allegedly some of the mortgage brokers and so on are saying the housing market likes that stamp duty relief. Let's have a look at Rightmove then. Where's Rightmove? Let's look at Barclays first, and I'll go to Rightmove. Yeah, I see some of these guys are holding up. Right, let me go and find Rightmove. Gap down. I just wouldn't trade that. That's well, the fact it's gap down suggests that 585 is a short, but it doesn't interest me. I'm certainly not going to touch that
The
one.
question
But
about the gap. What do they suggest? The gaps?
the gaps. If let me just grab the pen.
Yeah.
If
You look at countryside as well.
Okay, I mean, if you gap down, it suggests that there's a heck of a lot more. That it's very bearish. Markets don't like gaps, so if gaps fill, what you normally do is wait for a gap to fill, short it on the backfill with a stop above resistance, and then see if that can continue in the direction of the gap. So the principle is that the gap is gap down is a signal for a short. You wait till the market backfills and closes the gap, because markets don't like gaps, where all the bears sit. In theory, all the bears sit getting ready to sell it, and then it goes back in the direction of the gap.
So yeah, standoff.
Yeah,
Countryside properties.
countryside, right. These are builders,
Mm.
the builders and surveyors, is that right?
surveying, I think.
Surveying. Short term could hold up. It's dropped from 375 to a major support at 317. If it continues to hold this area, it could build from here and start to perk up. But any close under, and particularly any gap fill, if we so here, if we backfill to, so if we find ourselves coming back to 360 and then putting us and closing lower, this could ultimately roll over. If we're so bearish and it just closes underneath here, then expect it to come back to that support. So that's it's made a move and it's nestling in support. So that's a hard one to call at the moment. I would, if I'm going to short, I would short the ones we talked about, where they're just beginning to roll over, like Gaines Workshop and Auto Trader. But something like this, it's a little harder to pan out, because, well, you can't. I wouldn't short it because there's so much support there. So the risk reward ratio for support just isn't there, because if you short anywhere down here, you've got to have that amount of stop for that amount of reward. So that's just the risk reward ratio is just not there.
Yeah, I mean, whatever it is, it's like a downbeat mood anyway in the development market.
Yeah.
So, yeah.
Okay, well, unless you've got any specific stocks, let's just leave it there, as I've been talking for over an hour now, and I'll just do feedback as the week unfolds. Anything else you want to look at?
That's all. Thanks, Mike.
Okay. Right, okay, so I've got a mixture of buys and sells there, but yeah, as we kicked off, just see how this each day unfolds at the moment. Take it a day at a time. Thanks very much, everybody.
Thanks.
And midweek review is Wednesday at 6, and let's just get this week underway and see what it gives us. Yeah. Enjoy the rest of your weekend.
Thanks, and to you.
Bye.
Bye now. Bye.